Hello, ladies and gentlemen. It's a modern investing on Pod TV. My name is Sasha Star, and I would like to introduce our regular contributors. First of all, Dr. Milan Sombrok. Welcome to the show, Milan,
Delighted to be here. Thank you for inviting me.
of course, and Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha. It's always a delight to be here.
Thank you. And today is Wednesday. The market is up. Not Dow Jones though, but Dow Jones actually is now well over 40,000, which a week ago was almost like a dream. And what's interesting is that a lot of people are absolutely amazed by Warren Buffett and his strategies. So Warren Buffett, while being a great trader, he sold 500,000 shares of Apple at 196. And a week later, today, Apple is 222. So that he left on the table a fortune by his trade. And I would like to sort of get confirmation of his wisdom as a great investor, as a tactician and strategist and everything else. Milan, you obviously
you started out by saying that a lot of people are impressed by Warren Buffett. Now, since he launched Berkshire Hathaway in 1965, that's 59 years ago, Berkshire Hathaway has averaged an annual return of 19.8%.
Wow!
19.80%.
Unbelievable.
Average annual return for nearly 60 years, during which time the S&P 500 rose 10.2% annually. That is
here on one single trade, he lost 20%. How do you explain? Is he getting older and no longer can regulate his trade?
I can explain it this way. He is not as involved as he used to be.
That's almost certain.
His favorite holding period, Warren Buffett's favorite holding period, is forever. So he would not necessarily buy a stock. He would buy a company which is traded on the stock exchange, so it looks like he bought a stock. No, he bought the company.
You can't buy one without buying another one. Please, if you are buying company which is trading, you are buying its stock. You're not buying controlling position. I never thought that Buffett would take 60% of the company, whether it's a Coca-Cola or American Express, and run it. He never ran anything.
That's exactly true. Yeah, he lets the people whose company he buys continue running it because he bought it because they ran it so well.
But he never had over 50%. So he was never in a position, even if he wanted to run the company, he was never in a position to do so.
Right now, the man who is likely to succeed Warren Buffett is Greg Abel. Greg Abel happens to be Canadian, and he plays hockey every day. So in Omaha, Nebraska, hockey.
Maybe he should keep playing hockey. I don't think.
Yes, and so he is making many, if not most, of the decisions now. So
including Apple. So
I'm not sure. I don't think that Warren Buffett at his age now is well over 90. 94, I think he is.
But he should stop bleeding. He should stop bleeding. Maybe sell everything, go into cash. Because if you're losing on each trade 20%, there will be nothing left.
He has Berkshire now has most of its holdings in cash because the market is greatly overvalued.
Who says
well, Sasha, I gotta disagree with you on that because I think what he probably didn't lose 20%. Probably he made a lot of money when he sold at 196 because it probably bought it at a much cheaper price. And so he sold too early. That's something that you can say. But he probably made a lot of money on Apple.
Okay,
I know a lot of people did.
he could make even more money, but okay,
He
that's
could,
fine.
yeah, yeah.
He would. Yeah.
Oh,
You
Okay.
know what I did with the Nvidia? I sold Nvidia way too early, and but I made the money that I wanted to make, and I got out, and I was happy. But then I wasn't that happy when it practically doubled in price after
Last week, I
before.
liquidated everything. I even bought back all my covered calls, and I left complete naked position on Nvidia all the way, and I
Oh.
was rewarded hugely in the last 3 days. And today, I did just a little weekly trade, not even weekly, 3 days trade. I bought about 1,500 shares of NVIDIA and sold 1,500 covered calls expiring this Friday. So that will generate me a few $1,000s worry free. Takes 2 days because the trade will unwind on Friday. And I think, what the heck? I mean, why wouldn't I make this few $1,000s? It's going to be 7.5, maybe $8,000 at the end of the day. So why not? Because if I'm not going to do it, somebody else will do. I don't want to be in that position to see somebody else making so much money, and I'm staring at the screen and saying, "Oh, I could have done it. Oh, I didn't." Okay, next time.
Have
No.
you changed your thinking about Nvidia in the long run or short run, or
Well, in the long run, it's definitely $200 plus stock. Now, how soon is going to happen? The first, it has to go through $140 a share. It has to go
there's resistance there?
decisively to 150 or more.
Mhm.
That could happen by the end of this month, exactly on August 28th, when there is the earning reports, and everything what I can see is going to be blockbuster report because
It seems like that the revenue's still there. I don't see any other reason. Yeah, I agree. That's why I was curious as to why you made the moves that you did, because it seems like it's still in a short run play.
read the tape. Look at what's the stock doing every day. It's every day climbing $4 or $5, $7 a share, and nothing. Even today, when the market is not so strong, even today, Nvidia is still in the plus territory, while AMD and many other stocks are down in red.
Yes, that's true.
Nvidia is in green. So the tape, just watch the tape. You don't have to be a genius; just understand the tape. That's all what there is to it. Right, Jim?
I agree with you. And the other stock that's in that field that I have AMD, which is down, and Marvel Technology, MRVL is the ticker tape, and it's down, but Nvidia is up. So, those are the same sector, and yet, yeah. So I'm still I rebought Nvidia when they did this split, and I'm keeping it for now. I haven't made my money yet, but I expect I will.
Well, from my point of view, also, don't forget that I'm playing now with the house money.
Yes.
They're
Absolutely.
technically mine. Technically, they're mine. And I'm not going to leave on the table a lot of money easily. It's not going to happen. But I want to maximize my profits. I'm not happy just to guard my winnings and make sure that I will keep them. And no, I'm just as aggressive as 3 months ago, or 6 months ago, or a year ago.
But what I did in blackjack was I put, if I doubled my money, I put 50% of it back in my pocket, and I played just with the house money. And
It's possible.
have you done that, or are you still all in?
I play, when I'm winning, I play even more aggressively. And I'm going ahead full speed until such time as I will lose 10% from the maximum. So if I started, let's say with $3,000, I'm going to
my. Yeah.
I still bet even more aggressively. So before my bet would be $50, now it's going to be $100. And if I will lose from 6,000, I will lose 600, which is 10% of 6,000. I will stop the game.
Interestingly, James, you said when I double my money. In all your years of investing, how many times have you doubled your money.
Well, yeah, it's the minority of the
Yeah,
plays
of course.
that I make. Absolutely.
And what
It
you're talking
happens in blackjack more often.
yeah, no, you're talking about NVIDIA and Microsoft and Apple, and everything that you mentioned are examples of innovation where we should be going. We should not be trying to maintain manufacturing, which I think Trump wants to do, because people who are in manufacturing hate their jobs. They love Fridays, they hate Mondays, and they get paid very well, but they don't like what they're doing.
I agree with you.
And if you like what you're doing, it's not really work. So we should offshore manufacturing. Let the Chinese do it. The Chinese are offshoring manufacturing too. They're going to
Vietnam, yeah.
Vietnam and Serbia, would you believe?
Yeah.
And we should stick with innovation where the future is. People who are involved in innovation are 24/7 at it. They love it. They love Mondays. They hate Fridays. And so we should stick with innovation. Now, everything that you're talking about is connected to stock picking. Stock picking works occasionally, but not in the long run. When you're picking stocks and timing markets, you can beat the market in the short run, the week, the month, the year, but not in the long run.
I would disagree with that, and I'll tell you why.
Well,
Not to forget about NVIDIA. Okay, NVIDIA is an exceptional situation once in 100 years. Okay, let's assume that and forget about it for a while. What's happened here is that there is a publication which I mentioned several times on our shows. It's Investors Business Daily,
Yeah.
which started by great William O'Neill, who passed away a few months ago. But the methodology of picking the stocks is still there. They have tables which show relative strengths of the stock, relative strengths of the group to which stock belongs, momentum of the stock, all other indications which makes a stock selection is not really a great deal, especially if you're trying to pick up the best of the best. Okay, it's a challenge which is still possible, but if you want to select 3 stocks, maybe 5, but I wouldn't even go for, I would pick up 3 top stocks and concentrate on them right now. Okay, NVIDIA is definitely one of top 3 now, but if NVIDIA has such a great momentum and it's such a great story, it's a great company, it's a great stock, it's a great earnings momentum and everything else, then why do you need the other 2 stocks? Because even if you will buy NVIDIA and 2 other stocks, okay, you will not buy it in equal weight. So you will buy, say, 50% you will invest in NVIDIA, 25% into a couple of other stocks. And then all of a sudden you see how much money you're making on NVIDIA and a little bit less and sometimes a lot less on the other 2 stocks. And then you think, why am I doing to myself? I'm butchering myself.
The idea of diversification is lauded and applauded, and we should all diversify.
It's for losers. No, diversification is for losers. It's people cannot consistently make any meaningful money by diversifying, because by diversifying it means that the money from the top holdings, you now take them out of top holdings and put into S&P 497 garbage stone, 493 lousy garbage stocks, and you say, "Oh, I'm diversified." So, but what's the purpose of that?
This is what modern investing is all about, Milan. Because when I was taught, when I taught myself how to invest, everybody said diversify. That was the primary the message that you got, and I think that's still a good message for people who aren't really going to track their investing.
Agree.
Right. And so it's interesting, and the usual viewers will know that Milan is the most conservative, Sasha is the most aggressive, and I'm somewhere in between. But I think there's a place for each kind of investment strategy, depending on what type of investor that you are. And if you don't want to put time into it, if you don't want to track things, buying the ETF that represents the S&P is a very smart way to play it. And if you like, and part of it is your personality. Like Sasha, when he's on a winning streak, he's gonna go more aggressive. And when I'm on a winning streak, I'm going to put away something, take something off the table so that I don't lose it all. And then I would kick myself, and and I would just make sure that I was hedging my bets. And then I never want to lose once I'm on a winning streak. I never want to lose at all. So I'm a little bit more conservative, but I'm aggressive to get that winning streak. And then I become conservative.
I want to ask you a question. Let's see. Okay, you have a portfolio. You have, say, stash of cash, say $100,000, and you have several different stocks, including Nvidia. And you see that Nvidia every day is climbing 5, 6, 7%, and you keep $100,000 in cash. How you find the temptation of having that cash, or at least part of that cash, employed in Nvidia? How you do that?
Well, that's why I ended up buying Nvidia again.
Okay, that's a good one.
Well, if you allow me a couple of minutes,
Yes.
I'll say this. When you, James, and you, Sasha, are right, I agree with you. But when you're wrong, I cannot. Now,
Okay, that's a good one too. Yeah.
now, you're talking here about stock picking. Picking stocks and timing markets works in the short run, but in the long run, it doesn't. Asset allocation is the way to go. And David Svensson, who led the most successful university endowment on the planet, says that asset allocation is the most important. So now that means a 50-50 asset allocation, where you have 50% in cash and 50% in the S&P 500. That works well for most people. 60-40 also works, and 45-55, doesn't matter, just so long as you have a lot in cash. Then when the market goes up and you wind up having more in the stocks, it's the securities that you have in cash, you take some profits to bring it back to 50-50. When the market drops, then you have more cash than the securities. Then you take that cash and bring it back to 50-50. You're always buying bargains. So the people who have that approach to investing, which our members do, Monday Morning Millionaire members, about 300 of them,
Quite sensible.
you're happy to see the stock rise because you're taking profits. You're happy to see the market drops because you're buying bargains. In both directions, you're happy. But
And over the long haul.
over the long haul, that's right, yeah. And the long haul is really what matters. We may not be long haul ourselves. We may not live another 10 years, 20 years, but we do have an estate. And
May I elaborate on that? I'll give you a much better example how to preserve your positions and how to protect your investment at the same time. For example, in my situation where I'm exposed to NVIDIA in big time, let's see, I have now 4,000 shares. I have 1,000 shares of NVDL, which is a double position on NVIDIA, and I have NVDY, which pays monthly dividends by selling covered calls. And I increased that position just as well to generate more and more monthly cash, which I don't really need it at this point, but why not? Now, on my position, which is my average price, say $120 a share. So I've to protect my at least partial investment, I'm talking about 3,000 shares. I sold on those shares March 125 calls, generating for each call about $15,500, almost 16. You know what that means? It's almost $50,000 I've got paid up front. So the worst case scenario is that stock could be taken away from me at the same $125. So I'm making a little bit of money on the stock itself, but most of the money I'm making on options, on this covered calls that I sold. This is my great profit. And let's see, by March next year, the stock will be the same, say $125, maybe $130. I think it will be much more than that. But let's see, take scenarios that will be right there. I can always buy back these calls at much lower price, maybe $3, $5, for each call where I got paid upfront almost 16. So I will make even more money on these covered calls, and I still have my stock intact. Plus now I'm employing it's kind of a synthetic strategy of selling close, say weekly expiring covered calls,
Right.
which generates, of course, it's not the money that I would like to see, but at least it keeps me somewhat liquid because I'm preparing to deliver stock. Let's say I sold 118 Friday expiring calls, covered calls. Okay, so 1,000 shares will be taken away from me at 118, but I was paid up front 5.5. So this is this is a strategy that generates even more money. And there comes Monday, I can do the same thing again if I want to. I'm not very enthusiastic about this strategy, but when there was so much uncertainty and people are waiting for this monthly report and on August 28th. So I decided, okay, so I'll make a few $1,000s here and there. No, not a problem at all. And in the meantime, I'm looking forward to upcoming report, which I hope, and I think actually more than hope, that will be not only positive, that it will beat all previous reports just as well. But we'll see. I don't want to run ahead of myself.
A couple of things here, Sasha. One is the shorter the expiry date, the greater the percentage return. So you're right to pick up short expiry date. The other thing is that in a rising market, holding the security is better than writing covered calls.
Agreed. Yes, I do agree.
Now, in a Canadian environment, we're not allowed to sell cash covered puts in our tax advantage portfolios, which in the United States you can do. And so that has to change. You can open a margin account that will allow you to do that. To open a margin account, I think you have to have at least $10,000 in it, which will not buy you a whole lot of SPY. Right. But you could buy, let's say, Coca-Cola, which trades at a much lower price and makes that possible. So we need to have a margin account to write cash covered puts. And that's really the best returns you can get, is to, say, sell covered calls, take the premium, and keep selling covered calls, short expiry date, a week from Monday, let's say, and keep the premium until you're assigned and the stock is called away from you. Now you have cash. That allows you to sell cash covered puts. And you keep selling cash covered puts and taking that premiums until you're assigned and the stock is put to you. When it's put to you, you own it again, allowing you to sell covered calls on it.
Milan, you see, the problem with selling close expiration covered calls is that, okay, you're making a little bit of money here and there. Sometimes stock will be taken away from you. If you don't want to defend it, you have to buy back this covered calls, sometimes at loss, and then sell another one. I'm a strong believer in cash up front. So when you're selling March 125 calls of NVIDIA and you're getting close to $50,000 US, right in cash, right on your account, all the consideration about the selling all this Friday expiration and collecting a couple of $100 here and there or so on, mathematically, I agree with you. You're right. In percentages, you are right. But in real money, I'm not.
Cash is king. I wanted to talk about another report that came out. The Consumer Product Index the inflation level has dropped below 3%.
Yeah,
and
very important.
I think it is very important because that might have been enough to get the Fed to start to lower interest rates.
Yeah, the Canadian interest rates have dropped last week. Yeah.
Yes, and I congratulate the Canadian banks for doing that. The Fed has been very slow to do this, with the mistaken thought that they keeping the interest rates high were going to fight inflation. And this is an old school thought that the inflation is caused by an overheated economy, which is not the case in this round of inflation. It was caused by the global pandemic of the COVID pandemic. So they were treating it the wrong disease with the wrong prescription. and keeping it artificially high prevented people from getting mortgages on homes and things like that. Now, if they lower the percentage points, people can refinance. That will help them. And all of this will help people to continue to spend money. One of the reasons inflation has gone down, though, is people are bargain hunting. There's no indication that they aren't buying. The consumer price index reflects that people are still buying product, but they're not buying the expensive stuff.
They're very selective now.
Yes. And so companies are now finally realizing, hey, they stopped buying the costly stuff.
Will the Fed drop interest rates by September, by the fall, let's say?
Absolutely, they will. I think only a quarter point. There's reason to drop it 50, but I think they're only going to. They haven't been very aggressive, to say the least. They've really been.
If they're going to drop interest rates, as you say they will, has that not been already priced into the market?
Well, I think to an extent it has been, but they've been talking about dropping it for a long time, so it might have been priced in for a long time too. And I think when they actually do it, there is going to be some reaction to it that's positive.
Yes, Jim, but I've heard today on CNBC very interesting commentary is that Federal Reserve now, after the report, they figured out that the biggest enemy of inflation now is stock market itself. So everything is going down. Everything is fine. It's all great. But the stock market itself, it went up so much. And when you're talking about inflation of 2.9%, the stock market is going up 100%, some stocks. So that's the biggest enemy of inflation. So they have to now fight the stock market, I guess.
This is
interestingly, Irving Fisher was a renowned economist, widely respected. He published many papers, peer-reviewed, widely respected at the beginning of the 20th century. And he stated that the market has reached a permanently high plateau about 3-4 days before we had the biggest market crash in history. Would he be happy today? Because the market is at an all-time high. Has it reached a permanently high plateau? Will it stay there?
Yeah. Well, my thinking is why does the Fed hate good news? It's like the economy was not overheated. It was doing very well. It was reflected in record company earnings. So this was all good news. And the fact is that the jobs were more plentiful. Unemployment was down. It was down near historic lows. And they've been waiting until we got a bad jobs report. It seemed like people were starting to lose jobs. And then they're starting to talk about cutting. Well, that's reactionary behavior. You have to anticipate this kind of stuff. But you don't keep raising interest rates when there's no reason to, because then that will punish the economy. And they've been trying to create an artificial recession. And now that they're seeing signs that, hey, the economy is slowing, they're saying, okay, now maybe we'll take action because we don't want it to slow so badly that we'll get into a recession.
James,
again, it's reactionary. Why are you not thinking ahead rather than reacting to these reports and saying, oh, now the economy is having problems. Now we'll cut interest rates.
So prices
raise them in the first place.
Who controls the Fed? Who does the Fed answer to? To Congress? Who controls the Fed?
Theoretically, to no one. They are supposedly independent body that they're through measurements of different economic factors and data. They are creating, their mechanism is interest rates. But basically, they don't have any other mechanism except interest rates and their interpretation of the status of economy and all the stuff. That's all what they can do. So, of course, Trump, when if he will become a president, he will make the Federal Reserve a part of his apparatus, and he will dictate them what to do and when to do and what to say and what not to say. That will be a very different situation, but we'll see if it happens.
Well, the history shows that under the Trump administration, the Fed kept interest rates artificially low for too long. And in the Biden administration, they kept them high for too long, artificially high for too long.
Yes.
And this was not a political thing. This was just, the Fed was just not acting. It was reacting. So it didn't raise the interest rates until people were, borrowing tons of money because why not? Interest rates were zero. And, so that had an effect, not a good effect on the economy. And now when raising them too high, for no good reason, they raise them too high. And that prevents startups from starting up because they can't borrow money at that punitive rate. It prevents people from buying their first homes because the mortgages are too expensive. So why did they do this? Because of outdated thinking.
Jim, it's about housing market. There is also start of new housing is getting prohibitively expensive because the builders cannot get a loan at preferred rates. So
Correct.
It's not economically prudent for them to start so many housing projects.
Correct. So all of this is easily solved by the Fed just not being as old school thinking. Think about it in terms of what's modern, what's going on now. What is driving the economic forces now? It's a global economy now. It's not just the United States economy. And the Fed is way behind in its times, in its thinking. And until they catch up, they're going to continue to do destructive acts, like keeping our rates artificially low too long, not very long ago, and keeping them artificially high for the last 3-4 years. So this is the kind of thing that we have to, and as Milan points out, we can't vote them out of office. We don't have any control over them.
I just wanted to mention something, that the personality also means a lot. Do you remember time when it was Greenspan, it was Bernanke, and they had really regulated very successfully interest rates, how economy reacts, and so on. This Powell, it seems to me he's a kind of a middle bureaucrat who basically doesn't really say anything meaningful. He is getting late to raise interest rates. Now he's getting very slow to get lower interest rates. So he doesn't impress me personally at all. But
right.
That's the best we can have.
You mentioned two people that had the basically had the respect of the everyone. And so if you have someone like that in the job, then you can rest easily.
You remember there were even people who were watching how Greenspan holds his portfolio, whether he's in the left hand or in the right, whether at angle or not, and so on. So there was a lot of almost mystery to what he's going to do next. Now with the Powell, nobody cares really how he holds his portfolio, and it's
and Bernanke was also very, very strong.
Very strong, and he had a lot of authority.
Yes.
And at 8:00 in the evening on September the 10th, there's going to be a Trump-Harris debate. And that's worth watching. I think that Harris is going to make Trump look very bad. And, if Trump gets into power, God forbid, the Fed will keep mishandling interest rates and
absolutely
as it has in the past. But if Kamala Harris wins, and she's going to come way ahead on that debate, I'm sure of it. She understands Canada. She's lived in Canada for a while. So the situation is going to be much better. I'm astounded. I think all of us are astounded at the large following that Trump has. When he is a liar, everybody knows that he's a liar. When he has offended women, when he has offended the military, when he has offended blacks, how is it that he has so much support?
I think it's dwindling. I really do. You see the turnouts for his campaigns are smaller. The turnouts for the Harris campaigns are much larger, and they have much more energy. So he still has his base, which is maybe a third of the country, and they're totally with him. He could shoot somebody on Fifth Avenue and get away with it. They wouldn't change their minds at all. It's impossible to talk to them. But the independents and the people that are even moderate Republicans are now shifting. They've had enough. And I think that the Republican Party will change once they lose another presidency and lose another election. And also they're going to underperform in the Senate and House. because he's going to drag the ticket down. And they're finally going to say, enough of this MAGA stuff.
Yeah.
Yeah,
Gotta go back to being the Republican Party that old.
once and for all. By the way, on debates are on September 10th. I hope they will start early enough because he has to go to sleep early because on 11th there's a sentence.
He'll be on some sort of boost.
He has to
Put it that way.
on 11th for sentencing. So he has to finish the
That's
debate.
so funny, isn't it? Have we ever talked about a presidential candidate appearing for probation officers or for sentencing or anything like that? We've never had this in our history. 34 felony counts.
Kamala has to do one very interesting thing. When they will start debates, she has to tell him, Donnie, one lie, and I will arrest you right here. During
Well, she does not take any crap. Let's put it that way. She's much stronger than other debaters that he's faced. And she, in the Senate, she was so impressive. You know, when people would try to hedge, she would just nail them. So, but they're going to try to not to have the too much back and forth between the candidates. But with Trump, you can't control.
She will tell him just to shut up if he will try to do his usual thing. I'm wondering if he will indeed show up on the debates.
Maybe not. Maybe not.
He might not
find
show
an
up.
excuse. But if he does try to bully her, he will regret it and he will look bad. She will make him look bad.
What Biden did by saying I'm going to step down is something that Trump will never do.
Never. Never. No, it was a patriotic act because he didn't want to. He didn't want to. He was told that he was dragging the ticket down, senators and House people with him, and he's a patriot, and that meant a lot to him. But he's a fighter too. He wanted to fight. He wanted to win. He wanted to beat that guy. And the hat gets tipped to him. And the people that take shots at him now, after he's done such a generous and graceful thing, you know, I think it's totally classless. And you know, you might have policy differences, but you know, but the MAGA people have always been classless. You know, the things they're saying about Harris now are disgraceful, and you know, but they don't mind. They have no shame. So.
Oh, they have a cult following figure as Trump is concerned, and his choice of J.D. Vance is completely catastrophic. He had a fighting chance to appoint as a nominee
Nikki Haley or someone.
Nikki Haley, I thought Nikki Haley. And I'm surprised he didn't do it because on convention she endorsed Trump. She was fighting him during the nomination process, but she endorsed him. So he had all excuses to appoint her as the nominee for vice president, and he failed miserably.
Well, so Biden and Harris competed for the election. Biden won, but Harris was one of the people fighting against him. He nominated Harris as vice president. Yeah. That would have been the smart thing to do politically. But, you know.
Well, couldn't.
George Washington was the first person in history in power to say, I don't need any more than 8 years. He will be renowned for that forever. Biden has done exactly the same thing, hasn't he? By stepping down, he puts himself in a George Washington league.
I believe that very strongly. I think
actually he came all circle because at the beginning, even before he was elected, he said that I'm one-time president. That it implied, because of his age, because of many other factors, that he will be one-time president, and then there will be somebody younger, somebody different, and so on. So then he figured out that actually he can beat Trump again, and he decided to run. But what's happening is that the American people, more than 70%, they hated a preposition. There are two old farts are for the presidency. So now one of them is out, another one left. So obviously that loser will be taken out once and for all, and all this MAGA and all this nonsense with Trumpism and all this stuff will finally die once.
And it's still too early to really pay too much attention to polls. But the swing states have swung to Harris, and so that's
even more
the electoral college now. It's not the total number of votes. Trump has never won the total number of votes. So,
No, he's not going to win it this time again. And there are a lot of pundits now who are considering that Democrats will win it by landslide. Everything. The presidency, the House, the Senate, the judges, the governors, just whatever, just name it, it will be a landslide. But we'll see.
Yeah, we'll see. But I do think that the Supreme Court's ruling on Roe versus Wade is still playing a big part in what's going to occur, because all of the states, even red states like Kansas, they supported abortion rights. And this is going to play out. That's still going to drive people to the polls, and the Republicans are going to get punished.
And also women votes will be there, and black votes and Latinos votes and so on. It could be a landslide in certain scenarios.
It's so funny that we're talking about that possible landslide compared to what we were talking about a month before.
Yeah. It was another landslide was coming. The Trump will actually win. Our situation changed.
I mentioned previously that when we had COVID, when COVID first appeared, the countries that best handled it, and they were New Zealand and Finland and Taiwan, and I've forgotten the other two, the 5 countries that best handled COVID were all run by women.
Mm-hmm.
So, United States run by a woman, the vice president's office is a non-job, really. But if Kamala Harris gets elected and it's looking better and better, the country will be run by a woman, and we will all benefit.
It's about time.
It's about time, yeah.
Okay, listen, we had a very interesting discussion. I really thank you very much for participation in today's program, and I'm looking forward to see you next week. Same place, same time. Thank you very much, everybody, and good luck in investing.
And you're both right.
Excellent. Thank you. Bye-bye, everybody.
Bye-bye.
Welcome to National Pension Partners, where retirement planning meets peace of mind. Today, we're diving into the 412(e)(3 plan, also known as a fully insured pension plan. This isn't just any retirement plan. It's the gold standard for stability and guaranteed benefits. How does it work? Simple. It's funded exclusively by life insurance and annuity contracts. This means no market risks, no actuarial assumptions, just ironclad guarantees. Think of it like this. You're a small business owner who hates surprises. The 412(e)(3 plan gives you predictable, stable contributions every year. Your future benefits are backed by insurance contracts, so you know exactly what you're getting. No guesswork, no headaches. But there's more. These plans are designed to maximize your contributions and offer significant tax advantages. And with National Pension Partners, you're not just getting a plan, you're getting a team of experts, attorneys, CPAs, actuaries, all dedicated to making your retirement as secure as possible. We provide personalized consulting, ensuring that your plan is tailored to your specific needs. Best part, initial consultations and proposals are absolutely free. $0, zero commitment. So if you want a retirement plan that's as reliable as your morning coffee, head over to nationalpensions.com. With the 412(e)(3 plan, your future is in safe hands. Retirement planning never sounded so thrilling. Perfect for small business owners who like their finances as predictable as Monday mornings. Stable contributions, ironclad guarantees, and serious tax advantages. It's the trifecta of financial security. And with National Pension Partners, you get a team of brainiacs, attorneys, CPAs, actuaries, ensuring your retirement is as secure as Fort Knox. Oh, did we mention the free consultations? That's right. You get a personalized expert proposal with $0 down. So, if you want a retirement plan that's as reliable as your morning coffee, head over to nationalpensions.com. Because when it comes to your future, boring is the new exciting. Retirement planning never sounded so thrilling. For more details, check out National Pension Partners at nationalpensions.com. Retirement planning never sounded so thrilling.